Hey Brian, how's it going?
Mick, happy summer to you. 4th of July week here in DC. It's 103. Lots of festivities going on in the mall. But there is something hotter in the markets these days. You know what I'm talking about, Mick?
Hotter than 100 degrees in the shade? Let me guess. Abivax?
Abivax. This has been quite the story. Probably many see it as the number one takeout target in the biotech space. It's an interesting story. They've had some surprising, very effective results that they reported in phase three results. But in June, the stock has been all over the place. And there's been a lot of misperceptions about the story, about the case. And it's really a case of, not taking time to analyze the data, understand the broader context of it, and, you know, how this plays into the fear of investors, but also those that take the time and understand the story, how they can position themselves to do well in an opportunity like this.
Yeah, no, it's been a real roller coaster of a ride in June for Abivax. But you've been talking to me about this offline since well before that. You've been digging into this story. I think it may have been February, March when we first talked about it. But why don't you tell the listeners a little bit about the opportunity? I know others have covered it. Yet another value podcast did an episode with Adam May and can link to that in the show notes. But give listeners a bit of the background of what this company is and how you came across it.
Yeah, it's one of those companies that's been on my radar. I mean, the stock has been a phenomenal story, up over 1,000% from the single digits to $140 plus per share when they did come out with their data. And let me just explain to listeners what we're talking about. We're talking about obefazimab, which is it's a mere 124 drug. It's a suppressant to the immune system to help treat ulcerative colitis. And ulcerative colitis is a chronic immune disease where the immune system attacks the lining of the colon, which can cause ulcers, pain, bleeding, surgery to remove it. It's a very unpleasant existence. And there are many drugs out there that treat it, some with good effectiveness, but they have black box warnings, can cause cancer, and often because they are essentially shutting down the immune system, which is very different than what Abivax's drug does, which is to modulate the immune system, still allow it to exist and work. And they came out with their data, and I'm kind of fast forwarding to just the month of June because what happened in June was they came out with their part one maintenance data. The stock was in the 130s, and then it just in the after hours traded up to as high as 180. Man, can you believe this? Everyone thought it was really great data, but there was the very ominous word cancer was sprinkled throughout the press release. And to be fair, the company and many sort of think this didn't fully take the time to help investors understand what cancer meant. There's two doses that they looked at, the 25 milligram and the 50 milligram. The cancer was in the higher dose, 7 instances of cancer. And the thought was, okay, so more drug means that it's got more instances of cancer. And and so the stock fell down into the high 60s. Tremendous volatility. It did stabilize back into to the 90s and kind of sat there. And investors were waiting until the end of June, June 29th, for the company to release part two data. And the part two data was the other cohort, the patients that moved off of treatment or so you had the part one data, which was the induction phase, which looked at those that were on placebo versus getting the drug. And then if you weren't getting a benefit after 8 weeks, you still were able to get the drug in part two, but that wasn't considered the effectiveness. Now everybody got the drug in part two and extended the trial up to 44 weeks. So you could actually see if you did have a benefit. And so we were waiting for that data because it was the safety data. It was really was there a signal here with the word cancer? And, investors can go look up all of the headlines on the clinical remission data. They had 40% success rate, but the real headline was sort of the endoscopic remission data, which is when you actually go in and look at the colon, is it healing? Is it healthy? And that's two times better than another leading drug, Rinvoq. And so tremendous excitement around the drug is setting the potentially new gold standard for treatment in ulcerative colitis. Not to mention the fact that, there's potential applications for the drug in Crohn's disease that they're studying, which will be out in 2027 with some data. But again, small company trading around $7.5 billion, leading up to this part two data coming out June 29th. And what I think the context of this podcast, Mick, is to talk about some of those cognitive biases and some of the strategy and thinking that we have in terms of optionality and game theory for the company going forward from here. Because a story's been told, investors can go listen to many podcasts. We'll link them to them in the show notes or research on the company. But I think that there's just a lot of noise that is helpful for investors to think about, because what we do at FOMO Investing is we try to give you strategies and point out things that can help you be a better investor, recognize patterns. So when something like this comes across your plate, how do you position yourself for it? How do you see through the noise? And I'll just give one quick example, Mick. And it's a real concrete example. But the stock was trading at $95 a share just before the part two data came out. And there was so much fear, so much hedging, and the volatility played into the stock that you could sell August 2026 puts that are just, 40, 45 days out, and earn $26 a premium at $95 a share. So you could take it, like there was just so much interest in like hedging the bet. And there was the fear of pretty sophisticated investors that were probably already in the stock that thought they needed to hedge because of the cancer. And if you just took the time to take off the emotional hat and kind of, and Dr. Adam May does a great job doing this, to understand, some of the data and the statistics in terms of the data, and whether or not there was signal with that cancer risk that was highlighted, and just to break out the cancer just a little bit. I mean, there was so much that you could easily see. Number one, there was no concentration of the cancer. It was across various types of cancers. You also had things like, these are patients that are heavily scrutinized for skin cancer. That was something part of the study. So there was, very close examination of that. Also, because these are patients that have suppressed immune systems, inflammatory bowels, they have the likelihoods of incidence of cancers. And there was even, for example, an incident called chronic dysplasia, which was showing up as a cancer readout, and which is actually just a precancerous polyp in that was mistaken as colon cancer. So if you kind of dissect the cancer, there was, no real signal to it. That was one of the biases. I sort of think that the market misread. They kind of grouped cancer all together. There was a reflex to that.
Yeah, the sense that I got, from our discussions listening to Dr. Adam May is you got to peel the onion a bit more, right? I mean, cancer is, it sounds like there was a bit of throwing the baby out with the bathwater and not looking at base rates, because you're talking about a population, because weren't some of the cancer cases in the placebo population?
There were a sort of interesting one, which does come up as a side effect of the drug, was two pregnancies. And there was no concern that this was going to induce pregnancies. So that was been running around Twitter as a joke. However, there's a lot of just noise to this. The company talks about exposure adjusted incident rates. And this kind of is interesting because, again, we talked about the 50 milligrams having the cancer incidences, but 68% of the study were these 50 milligram patients that were receiving 50 milligrams. So you already had more exposure, what they call patient years, in that higher doses. It's a very important point because, you have a majority of the patients, there's just more likelihood of incidents happening. And then you've got to compare that to the base rate, which you talked about. But not just the base rate, Mick, of what's the population for cancers in society. but in ulcerative colitis. And the company, in their part two data, actually came out and cited reports on that were public reports on what the base rates were, and they were well within the range. I mean, they're not even close to being at the high end of the range. And so you're going to have random events. You're going to have things that are normal to patient behaviors with complicated other conditions, you know, and other factors, pre-existing conditions. And the company finally did, in the part two data, clarify those pre-existing conditions, which they didn't actually sort of do when the data came out. They did do a good job of sort of preparing investors with a, hey, this is how we're going to look at it in the part two data on the June 29th. We're going to fill in these blanks in our table. So they really got it right when it comes to explaining, whether or not there are any concerns here. And so like that, the cancer word was the big one, but as an investor, it was really going back to that emotional response to say like, okay, does this, there are multiple things that drugs can do to cause cancer, carcinogenic or change the DNA or whatever. What's interesting about this drug, MIR-124, Mick, is that it's actually considered an immune modulator so that it kind of has an effect to reduce the inflammation, which
Inflammation.
is therapeutic to cancer in a way. So
I
it's
think
just,
I think it's a really important point, right? And I think this is where some of the homework that you've done and others have done is, and maybe give us the counterpoint, Brian. There's other drugs that, so this is anti-inflammatory, and there's other drugs.
yeah. So inflammatory is that you've got when there's disease in the body, the body's always trying to replace cells and it causes the inflammation. This is more about modulating the immune system to,
Hey, Brian, you were breaking up. You want to just
sorry.
restart that answer? Sorry.
Yeah, I mean, I think that it's partly understanding how the drug is understood to be working in the sense that it helps the body heal and helps the immune system, have a positive effect on these ulcerative colitis patients. There has been complete remission, but what's really most exciting about the drug, Mick, is for the very sick patients, those with refractory disease, those that weren't getting treatment weren't seeing effect after 8 weeks. The drug in the part two data showed that that longer and higher doses were very effective. Also, if you were on the 25 milligrams maintenance dose and you sort of had some remission, changing the dose back up to the 50 milligram arm showed that it could have a positive effect. So the data is really interesting. I mean, now we're looking at this a retrospective lens, but I think we just want to highlight some of the lessons here in terms of, the behavioral side of this as to what led to what made this an interesting trade or an interesting investment. For me, I looked at it from a standpoint that there's always uncertainty in market data. I think in biotech it suffers from it more than others because of that uncertainty and the high failure rate. But if you take the time to kind of keep these things on a radar, and then if something like this presents itself, how do you position yourself for it? We could talk about how you do that. But I really feel like this was a great learning experience for many in investing in biotech that have an interest in Abivax, and just kind of want to go from, my perspective and being a astute observer to someone who actually said, I recognize this pattern. I'm going to go get interested in it as an investor.
Yeah, I agree with that. And one thing I take away, and this rhymes a little bit with, the think fast, think slow paradigm of Danny Kahneman. I think there's an element of think slow and act fast, right? Where, you're following this for many months, looking at the data. And look, you've been a biotech investor for fair bit of time now. You understand the difference between anti-inflammatory and toxicity, and what does that mean in the broader context of cancer, right? That so this is years of thinking and operating in the space to really dive deep into the data, informing your assessment of the investment opportunity. But
Yeah,
the
I think
opportunity
that's fair. Yeah, that's a good point, Mick. I mean, I do have other investments in autoimmune diseases, and this is clearly one. You know, I don't pretend to be a doctor. You still have to have doctors don't talk to investors. They really talk to patients, right? And so and companies, they're also sort of in their own world where they're looking at the data and they're trying to explain the data, but they forget what investors don't know. And I think that was the case here. Is that it should have seemed obvious when the data came out that there was no cancer signal, but the market didn't
the
pick it
market
up that
didn't get
way.
that right.
And there became such a compounding effect to the narrative. One thing I should mention, Mick, I did do a poll on Twitter. Did you see that?
Yep.
And so before the part two data came out, I put out a poll and said, how much of a safety overhang do you think the stock has at $95 a share,
Right.
$96 a share? And I put out, okay, the stock's only worth is going to go down to $70 or below, between 70 and $96, or 96 to 110, or above 110. And even there, only about 62%, I believe, said that the stock was worth more than 110. And this was this company that was trading at 130, 135, a $10
A few
billion.
weeks before, a few like May 28th, it was 130 before it shot up and shot down,
Right.
right?
And, but like the word that I keep using is that as you get these questions answers, you hear from management, as you see the data, as you understand the market, there's this term which is de-risking, right? And so biotechs are risky, they're volatile. So how do you stay in the game? How do you position yourself for it? We can talk about that, but you know, there it's understanding that each level, are they getting to where they need to be? Do they have enough cash to get to the next level? They only had cash through 2027 up until the part two
Yesterday
data came
or
out.
2 days ago.
Right. And just walk through what happened 2 days ago, Mick, in terms of what the company did.
Sure. So, when they came out with part two of their maintenance data on June 29th, the stock shot up and the company took advantage of that window and offered shares at $125 a share to investors, about a 9-10% dilution on for the existing cap table, and raised about $900 million in cash. And my understanding from some of what I've read is that extra $900 million of cash, given kind of the studies that the phase two and the phase three studies that they have going on, takes them to the end of fiscal year 2029, by which time they should have FDA approval if things go to plan. So this company, and I think it's worth mentioning the CEO here, because this, what's the term? This isn't his first rodeo, right?
No, no, actually, I'm very impressed with the CEO. I mean, I've been talking about how they, kind of stumbled on the on the communication of the cancer risk. I think it was, look, everyone's forgiven. The stock's back to 144 today. We've seen we've bounced back. You can only go forward from here. They've de-risked it. I am impressed with the team there. I think they know what they're doing. They put together a very good study, and the CEO has even been in the mix to really understand how patients are being seen in the study. So I, I I think that's part of this, is how important is the CEO, and I think the CEO comes from a background where he's been through a few of these. This is a
So
very
what?
important
Yeah.
drug.
What's your theory, Brian? Why did they raise the 900 million?
So there's some technicality here, Mick, and I know you've looked into this too, but they're dual listed. So they're dual listed here in the US and NASDAQ, and then also on the Euronext. And there's a limitation on the Euronext in terms of allowing, when you're raising money, to be having a conversation with fundraising or fundraisers versus strategics. there has to be a separation of those two conversations. Can't have them at the same time. Not sure why that is. I think it's partly just market signaling. If you're saying you're raising money, you're raising money. If you're having strategic conversations, you're having strategic conversations. I don't know that you need to disclose any of that, but that's the rules, and you're next. And it really, a couple of things, Mick. Number one is now they clearly can get to commercialization. They weren't going to have enough money to go do what they need to do to manufacture the drug, build a sales team, develop relationships, and launch this drug. That's a second endeavor of them. They do have a chief commercialization officer, which I think is smart, but also just to then plan for that. But really, it's having that optionality. I think you said it best, Mick. It's having positioning with the strategics to say we don't have to take it, right? So if they're interested in a buyout situation or a partnering situation, they come from a place of strength in those conversations. It's also not unprecedented, Mick. So a lot of great companies in the biotech space have raised capital and then soon after ended up selling the company. There is, this window of time right now before they file their NDA and for FDA approval at the end of this year, wait a full year for the FDA to get back to them, where strategics are going to be looking at them. And certainly before all that work comes in, we could talk about how this fits into the ecosystem of big pharma, but it sort of doesn't matter from the standpoint that they can do it either way. Now, why they are considered the number one takeout on Wall Street for biotech is because they've got a unique asset, right? They have got something that not only outperforms $8 billion drugs in this class, but is going to be best in disease, is considered widely to be best in disease. They have an optionality to double their addressable market with Crohn's disease. And the CEO even said, you have to believe that that study's got a higher likelihood for success based on this data. And so,
Well, paint
the
that
uniqueness
picture a
of it
bit.
is definitely worthy of a premium.
Yeah, so paint that picture a little bit more, right? So ulcerative colitis, which is where they're furthest along in the FDA process, that's only 1.2, 1.5 to 1.5 million patients in the US. Why is, I mean, at today's prices, it's, 11, 12 billion dollar company in an acquisition. Presumably in a strategic is going to have to pay at least a 30% premium on today's price, right? To gather some interest. Why does that make sense?
There's a few reasons why I think. Number one is they have to replace their pipelines. They don't have a license to print money. They do get a window to be a monopoly for a small period of time. It's considered a novel way to treat autoimmune diseases, and that could potentially be a broader scope that they could go for. Crohn's disease being an obvious one. Remember, this drug, and I won't go into the history of the whole company, it was first studied in things like HIV and then as a COVID treatment. It was interesting, and then they found their market. And this happens in biotech, right? So I think this is defending revenue, the amount of money you would spend defending revenue for some of these big pharma companies, whether or not AbbVie or somebody that's already in this space could buy them. I don't know. And think of this as sort of the next wave and how the disease is treated. Or if some new player comes along. What's interesting, Mick, is on Twitter, there are people who track Pfizer's flights across the globe. You flying into Paris,
Yeah, I saw
potentially to see
so
AbbVie.
that maybe the CEO went to Paris to meet with Abivax, something like this, right?
Yeah. I mean, there's it's hard to say there's any signal in any of this because people are having conversations, and you should track the bankers, I guess, too. I don't know. I guess they travel. I think the company, it's hard to say what they want to do, but if there's a price that makes sense for them to hand this over and be part of help a big pharma with the resources that already are in place, such as manufacturing resources, distribution resources, sales resources, all the things that you need to commercialize, you're saving a lot of time and effort from the management team in terms of their bandwidth that they would have to go do. Uh, and maybe the economic sort of incentive isn't there to work that hard. I don't know. Like maybe not. Like you've taken it this far, let another team take it to the next level. There was always part of that.
And Mark's done that before. The CEO has come in this role before and sold the company, right? Like that's kind of
Yeah, absolutely. It's looking at the optionality. Like part of this is okay. So what's the game theory for Pyramid? What is the company going to do? Do you think this is a takeout target? How are you positioning yourself? Are you in it for the next 18 months plus to see how it plays out? How do you as an investor think about this? I've got some views on it, but I would sort of hear what you think.
well, I mean, for me personally, I'm a long game kind of guy, right? So I'm, my position here, I like to be positioned for either option, right? So I mean, if it's a takeout target, great, but I also want my position size to be patient in case it doesn't get taken out. In case the $900 million raise, I mean, maybe it's their bat now, right? The best alternative to negotiated agreement. Maybe they're shopping the company in the coming weeks, but a lot of things could change, right? I mean, we're in a frothy environment now, and people are optimistic about having a strategic interested in this company, but markets could get trickier. And
Yeah, they could. I actually think of it as sort of a little bit of a premature merger arbitrage play. Let me play this out. We did a podcast on merger arbitrage. You could go look at it. It's the Ansys Synopsys deal. These things trade in a vacuum, Mick, and I mean that from the standpoint once the price, the takeout target, and that was a mixed stock cash deal, right?
yeah,
So, but in a cash deal, the price is the price unless there's a financing issue or a regulatory approval issue, and you look at whether or not the spread makes sense to close the deal, and you make a little premium on the spread. Make here, I think these things trade in a vacuum. The data is out. The data is not going to change. The data is now being baked into the market. The stock trades at $144 a share. You're talking about a $10 billion plus business. If you benchmark this to other unique assets, very like noteworthy acquisitions, I'm thinking pharmaceutics, $20 billion deal. This feels like it's in the end of that range of a $10 billion to $20 billion takeout. Again, we're buying science here. We're not yet buying sales. Those are different markets. Everything's different. But, I think that it's other than the fact that interest rates play into all of this and market volatility can come in at any time, as long as there's a takeout floor that's around the conversation, the narrative for Abivax, I think the company will actually be less volatile in the next 18 to 24 months than you could see in some of these overpriced, these frothy tech names, for example. Right. And so when you think about how this fits into my strategy, I'm using today's volatility, for example, to position myself. And we can even link to this, Mick, where I put out a strategy on X about how I position myself for this. And I think I'm the only one selling puts in January 2028, selling puts to dare the market to sell me shares at conservative prices below today's price and at bullish prices above today's price, with the net effect that I'm going to earn premium and have what I call sitting around waiting for my theta to decay, right? So I've got theta that's, I don't think in the next 18 months on a go it alone basis, there's going to be a lot of news coming out of Abivax, other than the fact that they said they were going to do what they said they were going to do, file with the FDA. They had an FDA meeting, got one scheduled the end of July. Who knows if they talk about it? And then we're waiting around for the approval. And we're going to have trickles of data and communications from the company on their cash burn. Absent that, they're going to be, the potential is that they could be a takeout conversation for a while and the stock could be less volatile. So I actually think the volatility priced into the stock right now, you could take advantage of and allow yourselves to acquire shares, you know, cash secure, don't use margin, but to do it in a way that you can keep bringing your cost basis down, earn premium on it, and then look at your worst case scenario. What if you were forced to buy those shares? That could happen. Or what if some of the shares you didn't end up wanting? There are 150 puts that can earn you, call it almost $40-50 of premium way out in the future, which will give you a strike price above 100, maybe 110 or something. Go look at what they trade at, but you could always then roll that out further as that date approaches. But you're earning, instead of like, who was the guy at Carvana, the investor,
Cliff, so
Cliff Zosin. He's got a huge position in Carvana. He talks about sitting around waiting for his stocks to go up. I think part of strategy for me, Mick, is having a position but sitting around waiting for my stocks to go up, but also waiting for my theta to decay and decide if I want those shares. Some of them being very conservative puts that are $70-80 a share right now that I placed back when the stock was super volatile on June 24th, or some of these are a little bit bullish. But I'm
yeah,
just trying to
no,
get a little bit more position here. So it's an interesting thing, and I point this out, Mick, because when I was looking at the puts going far out this morning, I think I'm one of the only ones doing it.
not a lot of open interest, is there? Right? Yeah, it's a great. I think if you're listening to this and you're interested, and if you think you kind of missed out on the June opportunity, I think what you're outlining is the theta, the volatility is there, and if you're willing to sell these bullish puts, you could have an all-in cost and get in at 110, which is pretty incredible, right? And no, I think it's a very interesting lens. I mean, you talked about merger arbitrage. I think there's an element of risk arbitrage here, right? And I think that's part of why you're comfortable taking a position like that is you're not reading this data at a superficial level. You understand where they are with this maintenance data, what the real cancer risk is, and the volatility that's implied in those options is based perhaps on a misunderstanding of the risk over the next.
Yeah, it's hard to value precisely the company. I think that's an important point. The analysts are re-rating the stock right now with the de-risking. They were kind of in the 90 to 120-ish range. Now they're up to 170-80 dollars a share. There's still some things that come to light to the upside. Certainly next year we're going to get the Crohn's disease data that could add further de-risking to the company. But valuing a pre-revenue biotech is not precise. And your job as an analyst is to be directionally correct, but also understand what can go right, what can go wrong. And how do you not, like, what I do is I try to have some various pathways to say, like, the best time to sell puts, Mick, is on a bad day. It's not on a good day. But the premium, the volatility premium that you do get from it rallying 40% a day is also baked in. Just like on a bad day when it falls 30-40% like it did. We had that weird flash crash on June 24th that no one really figured out. But like, you know, everybody was scouring the internet for data and there was, all sorts of theories, but it could just have been a hedge fund that just said, hey, I don't, want to look into this further. The cancer signal was there. I need to get out as quickly as possible. I mean, these things happen, but the whole point of it is markets are never perfectly efficient on these types of names. We just don't know. How much should the safety risk overhang be? I did a survey on it. We were very conservative on that. How much is the takeout premium on the stock? I don't know. It's still not even trading above its all-time highs. Now, we're talking about a company with, I don't know, about 100 employees, trading at $11 billion today. So, like, these are kind of crazy numbers for a pre-revenue company. But what I like about it is it doesn't really have anything to do with, some of these global influences that you see baked into stock prices around, CapEx demand and for various technology companies and whether or not Anthropic or Palantir is going to capture some of that or interest rates. Certainly, we've seen a biotech winter, Mick, in the 2001 timeframe. But we've actually recently seen the biotechs come back, and I actually think that, and Dr. Adam makes this point that, if the we haven't maybe even kept up with the index at today's prices. So there's a bullish factor there that maybe these things should trade in line with each other. The overall basket of the XBI has rallied. But anyway, it's an interesting story. I'm excited that we kind of are talking about it today because I think it's been really the story of June that I've been following closely. And I think there's some really good lessons here in terms of how it played out. And, I was very sort of skittish in terms of talking about it publicly because, the part two data it did have some uncertainty to it. But I actually felt comfortable enough with it that, I made some trades, but I also posted on Twitter, X, that it looks to be fine. I think everyone's overreacting. And you have to, as an investor, reach a certain level of conviction to take action. And I think that's the balance between being an analyst and an investor is the combination of the two.
Yep, I think that's the takeaway for me. Think slow, act fast when the opportunity is there, and you see the pattern, take it.
Yeah. The demand for shares was $3.5 billion, but can handle what they closed out at 900 million or so. As we close the pyramid, so just talk about, for example, the what you know about sort of the two conversations here that's been going on with strategics versus some of the work that we've done on that and what they sort of have signaled, the Reuters article that was out today talking about whether or not the lockup period for whether or not they will be having those strategic conversations. Did you read that?
I've looked at a lot of stuff, so I'm not sure.
Well, to summarize, basically the signaling today was that in the 2025 raise that they did, they said for 30 days they wouldn't be talking to strategics. In this announcement, they they didn't say that they wouldn't be the following week after raising capital.
Yeah, and there was that interview which you sent me with Mark that basically said, this Euronext thing, it goes week by week. So they're done with or they will be done with the raise on Monday, right, July 6th. And once that's done, that doesn't prevent them from probably in the same week after it's completed to go back and restart conversation with the strategics, right? So I think yes, there was a lot of FUD on Twitter about what does this $900 million raise mean? Is an acquisition off the table? Certainly if you're investors like us who are playing the long game, absolutely not, right? But even if you're a shorter term investor, I mean, weeks, hopefully you're not day trading in which, in which case maybe there's a way to day trade Abivax, but
Yeah.
I
No,
don't know
well,
how to do that.
so as we wrap this up, I just want to highlight just, where what one of the key opinion leaders said on their part two data release. And investors or those interested should go listen to the call because doctors really don't have a opinion on the stock price. They have an opinion about the data. And the comfort level that I got from how they see the data as a first line treatment, that they're excited to have a tool for some of their sickest patients that has seen a very positive treatment, but also just understanding that, you know, there's always an emotional response that sort of plays into analytical responses. And I think if I'm getting it right, Remo Pension at the University of Calgary talks about this. And he says, whenever safety is discussed, the initial response is always emotional because safety is the number one hurdle when it comes to any approved drug. They're already comfortable with other types of drugs like the JAK inhibitors in this disease that have black box warnings for cancer and how they use these tools and look for those types of risks and help patients understand the potential there. But you have to go back to why the exposure adjusted incident rates are so important to put the data into context. And that's what I think I learned as an investor here is always thinking about context here when it comes to kind of understanding the data and what it could potentially mean.
Absolutely. Yeah, no, I think context is key. Yeah, the fact that Rinvoq has a black box warning and sells at, 70 to $80,000 a year, is in market, has much lower efficacy, I think that context is key in appreciating the opportunity here. But this was great. Congrats on the trade, Brian.
Yeah, I mean, we're just trying to, it's an infinite game, but
Yep.
this is fun. We'll do it again soon.
But as always, take care.
All right, take care.